It's been to the Milken Institute Global Conference before. It knows that we save the revolutionary panels for Wednesday. This is the panel that talks about how we upend not just the financial system, but also the broader ecosystem around how we share and manage information. And so I am so thrilled to have this panel up here with me. And I think what we want to do is we want to cover a very broad swath of ground on this panel. So we're not going to talk about, too much the price of Bitcoin and what it is this week and what it was last week. We're really going to talk and dig in to what this entire ecosystem is about. And then where are the investable opportunities in the ecosystem? What needs to happen to make this ecosystem work better? What is the potential for the ecosystem? And where are we going to find ourselves? And what are we going to be talking about when we're at the Milken Institute 2025 conference, for example? And so you guys are lucky enough to get a front row understanding of this from these my fabulous panelists. And I won't spend a lot of time kind of introducing you, but Meltem, I do want to start with you. And I want to make sure that everybody in this room has the basics down by the time they get out of this room. So Meltem, I'm going to ask you, there's Bitcoin and there's Ethereum and there's like 1,000 different coins and the price is going all the altcoins and like what's happening? What is this? And where are we in 2019 in this kind of market?
Sure. So I think the most important thing for us as an asset manager, investors in this space, is there's two themes we need to separate. There are digital currencies and there's blockchain technology. And to us, the two key themes that are playing out is digitization. It's an evolution of capital markets, and we're seeing that happen quite a bit with Bitcoin now. It's becoming more institutional, more professional banks, professional services firms are interacting with digital currencies, but it's really about creating a new asset class. And that's the digital currency side. And then there is the blockchain technology side that is really all about digitization, transforming the enterprise and how systems work. But what's most interesting, I think, for us is Bitcoin and the idea of the Bitcoin blockchain, which is where it started for me personally 6 years ago when I started getting involved. Really what we're doing is we're solving social coordination problems using technology. And so a lot of the use cases of digital currencies, what's so fascinating, they touch on social problems, they touch on political problems, coordination problems. And so what we're looking at is these two themes of an evolution of existing capital markets, of enterprises, of technologies, how people organize, coordinate, and solve these coordination challenges. And then on the revolution side, we're seeing a lot of activity, particularly around creating new types of systems that are entirely separate from legacy capital markets, the legacy financial system, introducing new concepts that haven't been implemented and haven't been possible before. But we're starting to see these two converge in an interesting way. Okay, 5 years ago, we would have never been on this stage.
Right. Okay, but listen, I mean, I can't buy anything with Bitcoin. I mean, I can't buy a cup of coffee, I can't buy a car, I can't buy.
You can. You can. There are more and more merchants accepting Bitcoin. I think the big narrative around Bitcoin right now is store of value. And there are a lot of companies who are now at the point where they're starting to be able to offer products and services that utilize digital currencies to a broader audience. But you have to remember, 4 years ago when we started investing, and I was fortunate to invest in Elizabeth's company and Elizabeth's company, doing two very different things, none of the on-ramps and off-ramps existed. Many of the things. So getting cash into Bitcoin and getting Bitcoin turned back into fiat, that didn't exist. That interaction was not possible. And Katie knows, as someone who was working on the regulatory side, from a regulation perspective, I couldn't even get a bank to work with my portfolio companies. So I had 70 companies that couldn't set up bank accounts, couldn't operate. And so a lot of these fundamental challenges, if a company can't open a bank account and process cash in or cash out, it's very difficult to build a usable consumer application so that you can buy a coffee with Bitcoin.
Okay, so so we'll come back to sort of the pieces of this ecosystem and how we need to build them out. But Katie, you are at the world's most well-known venture capital firm, and you run the crypto portfolio there. Do you just buy coins or what?
No, we don't just buy coins. We do buy coins and assets, crypto assets, but we don't only do that.
But how do you think about this space from an asset allocation perspective?
So how we think about this space is we think about it, this really is we're long-term investors, right? We're not a crypto hedge fund, we are a venture capital fund. And we think about this, therefore we take a 7 to 10 or even longer year outlook. We think of this as really a new computing platform, much like you had PCs or the internet or mobile. And what you have with a new computing platform is you have, and we saw this with mobile, some things that aren't as good as the old computing platform, right? With mobile, it's a small screen and a tiny keyboard, and there are things that are lacking. But there are also features with the new computing platform that enable behaviors that we couldn't even imagine. For example, let me unpack that. Well, so for mobile, you had GPS, you had the camera, and those enabled things that we couldn't have imagined then, like Uber or Lyft or Instagram and many other apps. So what we think about in this space is some of the things, it's important not to confuse the current state of the technology with the end state, I think. But we think in the longer term, you're going to see decentralized apps built on top of this new computing platform that Meltem just said really enable human coordination at a global scale.
Okay. Katie, people have they've come from very far, and they paid a lot of money to come to this conference. You're at Andreessen Horowitz. We want to know where you are putting your money and how you are thinking about this.
So where we're putting our money, we're focused on, like I said, smart contract platforms.
Okay.
Right? What's the winning platform? Number one. And number two, internet money. We think the internet of information we have, right? It's connected billions of people around the world, but we're missing the internet of value. We don't have an internet money.
So what does that mean?
We're looking for the next internet money. Yeah. That's what we're investing in.
Okay, the next internet money.
Right.
Have you found it?
We hope so, but
You can tell us.
We can, we can invest in one of the things about being a venture fund is, right, we make numerous bets.
Yeah.
So we're betting on a couple different platforms. We're betting on a couple different categories of what we think are internet money that will connect people, again, as Meltem said, like people all over the world.
Okay.
Who might not have bank accounts now.
Right, okay.
2 billion people don't, so.
Right. No, for sure. And I think that's an amazing use case that I want to unpack more. Elizabeth Stark, Visa can process, what is it, just sort of 7,000 transactions a second or something like this. And, Bitcoin does 2 transactions an hour, it seems like sometimes. And this whole thing is so clunky. And how can it ever be sort of brought to scale? And what are you doing about that?
So the internet first came about in 1969. So it's been quite a while, the ARPANET, for those that know. And Bitcoin just recently, January 3rd of this year, had its 10th anniversary. So I know a lot of people want to think, oh, why can't Bitcoin do everything right away? And it's actually quite early in its evolution. So we're effectively in the 1979 in terms of internet terms for Bitcoin. So the nature of decentralized blockchains and cryptocurrencies broadly is you have to have what's called consensus. And the idea there is all the different nodes need to agree on the state of the prior history. And if they disagree, then you don't actually have a functioning blockchain. And the idea is if you're going to spend 1 Bitcoin, you cannot spend the same Bitcoin again. You can't double spend. Satoshi, who created Bitcoin, the pseudonymous creator, we still don't know who it is, solved the double spend problem, which was a big advance in terms of both computer science, economics, game theory, and all of that. It turns out, though, that in order to achieve this consensus and to have, say, right now there are 10,000 nodes all around the world, computers verifying Bitcoin, it's actually fairly inefficient. An analogy would be, what if in order to send an email, you had to download every email that anybody had ever sent, like these notes? You'd never send an email, right? It's super inefficient. So the technology that I've been working on called Lightning, the internet of value and money, if you will, is a layer 2 technology that enables people to transact instantly at a high volume on top of Bitcoin. So Visa, as you mentioned, the peak, I believe, is 40 to 60,000 transactions per second. With Lightning, we're looking at many hundreds of thousands. Bitcoin itself today can do about 10 transactions per second. So it's not going to be as high throughput, but you can go on the second layer and then have high volume transactions. And in terms of fees, I know transaction fees are something of interest in the financial world. Turns out you can today send 1 Satoshi, which is 5,000ths of a cent, for a fee that's less than that. So you actually have the ability to send very low value transactions for tiny fees.
I think we've all done that too.
Yeah,
on this panel. I think we've all held the lightning torch and passed it along.
Is it possible for you to explain what it is that you did in a way that we can understand? To make it faster? To make it, yeah.
Also how it affects, I know people talk about energy and mining, how your solution, how Lightning is is adapting that model.
Yeah, but again, to reemphasize in a way that we could all understand.
Sure. It's funny because it's like my family asks me what I do, and I'm like, well, it's a little complicated. But so at a very high level, you can think of it as if Bitcoin is like a decentralized savings account, I think of Lightning as a decentralized checking account. You actually go from your savings to your checking. So you have to go from Bitcoin to Lightning. And then the way that people transact is you actually have, it's funny, in the internet you have a series of tubes, and Lightning you have a series of money tubes. You actually send people money on the network, and you're connected. So much like packets on the internet travel through different destinations, on Lightning, correspondent banking might be something that's relevant to the crowd here. It's effectively correspondent banking, but you don't have to trust the people that you're transacting with using Bitcoin. So as a result, you're not actually touching the blockchain for your transactions. So you go from the blockchain to Lightning, you transact, and then you actually, when you're done, you can effectively net clear back onto the blockchain.
Anchoring it back to the blockchain.
Exactly. And then the blockchain is underlying the security here. For example, if I create Starcoin, that's my last name, and I can attack Starcoin, Lightning on Starcoin is not going to be secure. We're focused on Bitcoin because it is the most secure cryptocurrency. It's the hardest to attack, and it's the most costly to attack. So the security of the underlying blockchain is what actually backs the transactions that are happening on Lightning.
Mm-hmm. Okay. So speaking of correspondent banking.
My favorite topic.
Oh, so your favorite topic. So tell us about BitPesa. Start though with the problem that you're trying to solve, and then move to how you've come up with a solution, what it is.
Sure. So 10 years ago, I moved to Nairobi, Kenya to work as a rating analyst on banks, and what I kept seeing was a fundamental asset and liability mismatch. You saw SME, and this is the banking boom. I know it's not similar to the US banking booms, but the Kenyan banking boom was a big thing. And when that was happening, you saw them lending lending from Euro lenders, development institutions, and then on lending in local currencies. So you had a Ugandan SME bank doing great, lending from Triodos in Holland, and then on lending in Ugandan shillings. So no matter what they did, no matter what best practice, the currency pair slides, and at the end of the year, they're screwed. There was no local currency market. There was no local currency liquidity. And so if you're shipping goods from one market to another, you had to first translate that into euro or dollar and then back to your neighboring market. I'm from New York. It would be like if I wanted to send something to New Jersey, I'd have to go via Canada, or worse, Mongolia, for all extensive purposes. So just this huge cost was put on the place. And then and just like what Meltem was saying before about evolution and revolution, once you kind of evolve that system, which is what we did with BitPesa, you can then all of a sudden think about new business models to create on top of that, things that weren't possible before, because now you have something that functions in one day or at a third the cost.
Okay, but first start about how did you evolve the system?
Yeah, so when we founded BitPesa, the idea was to become a liquidity point, so a market maker for Kenyan shilling that didn't travel through the US dollar. So we're just linking two pools of liquidity. I started my career as a prime broker in Credit Suisse, where I had a hedge fund trying to exit a position and a rich old guy in Lucerne, and we're matching them together. So fast forward into Kenya, I'm finding remittance companies that are buyers of Kenyan shillings, and I'm looking for corporates that are sellers of Kenyan shillings, and we match them together. Fast forward 5 years later, I have 45 bank accounts in 10 African countries across the UK, Europe, Abu Dhabi, and Japan. And with all this infrastructure that I've built, I'm able to make a market cheaper, faster, easier, more transparently than a lot of the banks who aren't incentivized to kind of invest in this Forex services. But when I started, it was from my living room in Kenya, how was I going to accept my first form of payment? So, just like if you're starting a bakery business, maybe you'll use PayPal instead of cash, I use Bitcoin. So for me, Bitcoin was an enabler. It was a technology that was open source, it was robust, and there was a great community around it that was willing to help me. Now, not only was I'm Ivy League educated, I'm from New York, I have all these wonderful privileged things, but I was physically in Kenya. I'm a woman, I was a working mom. I know we're not talking about gender things on this panel, but for me, I was excluded from the traditional VC investment fund. I didn't have interbank corresponding relationship. I wasn't Citibank. So how the heck was I going to start making a market? So that was very interesting to me about inclusiveness. Inclusiveness is not just a refugee in Somaliland. Inclusiveness is a lot of people outside of you folks, to be honest. So there are entrepreneurs out there. There are business makers. There's a lot of money to be made. There's $200 billion in intra-Africa trade that's not being addressed as a consumer market or as a wholesale market.
Okay, so apart from your startup costs and how Bitcoin made that easier, What is it about Bitcoin in terms of your solution that is required? Why is this the technological platform that you wanted to use?
So I've lived all over the world. I travel all over the world. You wouldn't believe how many passports I go through a year. And I have tried all sorts of payment systems, from PayPal to mobile money to international correspondent banks. Nothing works, and I don't say this like an ideologue, nothing works as consistently and as easily as a Bitcoin payment. If it's the middle of the night and I'm in another time zone, I need to make a payment, it just works. It's just easy. There's no middleman. And so if you've used it, and I encourage everybody to try it out, it really is a step change from what you know. And for me, it was similar to when I first arrived in Kenya and we were using the M-Pesa mobile money system. You know, my family would come from New York and say, oh, I'll pay for this. I'm like, done, already done. They're like, why are you leaving the house without your wallet? Just go everywhere with a phone. I could buy a tomato, an airplane ticket, I could pay my taxes, school fees, all from my SIM card. And that was the domestic system that worked really well. It's not an international system, but it works great domestically. I went to a telco conference in Paris years later, and they were like, we're developing this thing where you go up to an ATM with your phone and you can withdraw. I'm like, they have this in rural Kenya 6 years ago. So I mean, I think when you think outside the box about what's possible, and you say, okay, Bitcoin is for crazy people. No, Bitcoin actually works for a lot of people, and it is useful. Yes, not everybody's using it from Connecticut to Dallas, but I think that we can't ignore the fact that this is 10 years in, it's already working so well. Even from my couch, when I was first trading, I was 1/3 the cost of other wholesale FX brokers. And I had an article on Bloomberg go wild, go viral. And I'm thinking, this is 1 month in. You know, I'm now 5 years later, look where I am. I mean, where will I be in 10 years? Where will the other entrepreneurs that started with me be? I mean, some of the people that started at the same time as I, maybe not in Kenya, are Bitstamp, are Coinbase. This is the generation one of the first companies building on this. And then we have the innovators like Elizabeth coming in like a year or two later, just upping the game so much more. So if you think about the first on-ramps and off-ramps that were built, now we're seeing smart contracts. Now we're seeing the things that Katie's looking at.
Yeah. So let's talk, so, you know, I was sitting on my couch eating bonbons and watching Netflix, but never mind. Okay, so let's talk about these things that you can build, these applications. Let's kind of dig in there. Who, you guys want to?
I'm happy. So to start there, since we've been investing in this space, I've been at 2 different firms investing for the last 5 years, and I've invested personally as well. So I've worked with over 150 different early stage companies. Tends to be my focus, the earlier stages. And it was interesting. So in 2015, I was raising assets for another investment firm, and we were meeting with all of the banks on Wall Street. And this was, if you have to remember, Bitcoin had gone through this crazy run-up. And then Mt. Gox happened, this big exchange got hacked, there was all of this fraud happening, and so it was a kind of a bad time to be in Bitcoin, and I think we all remember it because we were all starting at that time. And so there were a lot of misconceptions, but going out to the street and talking to institutions about Bitcoin, what it represented, and it was really only Bitcoin at that time. That was still sort of iteration 1. It was so interesting. Ultimately, our investors ended up being firms like Western Union, like MasterCard, like CME Group, like Transamerica, right? Life insurance companies, banks, financial institutions, payments companies, even Foxconn was an investor, right? Technology firm. They're all looking at this, and while it seemed very esoteric and very strange, and Bitcoin was this thing that made people a little bit uncomfortable, there was a strong political angle to it, a strong political undertone to it, but there was something there that was really compelling. You fast forward 4 years later, if we look at all of the quote-unquote crypto unicorns, they're all exchanges or businesses that provide those on and off ramps we were talking about. Those points where people can, in a trusted, regulated, secure way, with a brand they know and trust, take their dollars, take ACH, credit card, go into digital currencies, and come back out. And what's been so interesting to see over the last year is we have firms like Fidelity, now for some of their clients in the crypto space, including asset managers like us, custodying people's digital currencies, their Bitcoin. We have firms like the New York Stock Exchange, their parent company ICE, creating an entirely new subsidiary to provide a brokerage platform to Wall Street institutions. And so to me, that is such a tremendous shift, and it's only made possible by the fact that there are crazy people like Elizabeth, like investors who are crazy, who are looking at this and are willing to do something that is so outside the norm. But once you start building those building blocks, the things that become possible are, sometimes I go to meetings with early stage companies and they show me what they're working on, I'm almost terrified because it's so incredible. It's almost, some of the ideas are like sci-fi ideas. I'm like, wow, this is now possible. And I don't think,
we're definitely seeing some of that.
Give me a couple of those.
Well, one is decentraland, that is you can buy real estate literally on the blockchain, right? And then digital goods, these things called NFTs or non-fungible tokens. The idea
but it's virtual real estate.
Right, it's virtual real estate.
For a made-up world, I guess, AR, VR
and one of the things where we're seeing a lot of innovation early in the space with some traditional kind of, frankly, serial entrepreneurs who have built successful businesses before is in the gaming space. Because why are you paying in these walled gardens, for skins on Fortnite when you can't then take them and use them on other platforms? What if that platform goes away? We see a lot of platform risk, and that's one of the things that crypto solves, is it fundamentally, by its architecture, it puts control back into the hands of its users.
Exactly. And this is what I was saying yesterday, which is, I'm arriving at an ATM in Johannesburg with my US card, and it's not working in that ATM system. Does that mean that the ATM is invalid? My card is invalid? It's a simple exchange into another system. So once we kind of understand that seamless connectivity or the interconnectivity between different systems, whether it's video games or local ATM networks or local banking networks, that's a problem for a lot of people. And I think we don't talk enough about that. We say, oh, that already exists. But what is the error rate? What is the outage rate? How often is that a problem? I don't know how many of you transfer money or make wires frequently. If you talk to your finance team, if they're doing a wire every single day, I bet you they'll tell you 3 out of 10 wires are missing or delayed. Or even more if they're going internationally. Yeah. So, we have to talk only about not just new things, but also rewriting and improving and optimizing what we have right now.
That's absolutely true. We talk about things in venture, we talk about TAM or total addressable market, but you look at remittances, and this is like people sending money home, right? It's not even business to business, it's people sending money home, and it's billions of dollars a year. And
24 billion in Nigeria, yeah.
In Nigeria alone.
24 billion, yeah.
And so the US and Mexico is the world's largest payments corridor, and every year billions and billions in fees are paid for people sending money home. And then, talk about, 7%, 6%, the percentages are all over, but in countries like in Africa, Angola and Namibia, you're talking about a shared border. If a farmer wants to send goods overseas, it's not even overseas, over border, 50 miles away, they're paying 30% in remittance fees, 30%. And so you quickly see it's billions of dollars you're talking about.
And these problems are being solved already. So, we don't have to look to just crypto. If you go into the marketplace in Lagos in Nigeria and you look at all of the vendors selling Chinese goods. So now African fabrics used to be printed in Holland. Now they're printed often in China. So that and many other things they're importing. And we're trying to sell to them, but they're like, oh, we already have a solution. We're connected to all the Chinese fintech apps via WhatsApp, and we pay via this, and then we actually use those points that we have on these fintech apps now with each other. We've created our own micro community. They've leapfrogged Bitcoin already.
But I think the important point here is that we can start to layer these different networks. So you see JP Morgan is using a digital dollar that is based on a private Ethereum implementation to enable settlement of bond contracts that they're trying to digitize using the technology. So that's an example of evolution. But ultimately, that could connect, so you could have US dollars connecting with something like Bitcoin that's very different, connecting with a fintech payment app that has its own in-app walled garden payment ecosystem. The ability to interconnect things that have historically been disconnected, I think is what's really exciting. And we are seeing that convergence, especially with these new tools like Lightning that are being built that enable efficiency in a way we haven't seen before.
So yeah, on the application question, so in terms of Lightning, we had the first release a little bit over a year ago for the main Bitcoin network. So previously you could use it with fake Bitcoin, then you could use it with real Bitcoin. Even today there are limits, so you can only send up to $200 because we believe deeply in security, and it turns out when you build a new financial protocol, you want to ensure there aren't bugs. This, at the end of the day, is decentralized financial infrastructure. So those limits will be lifted likely later this year. But we've seen an explosion of applications because really what Lightning enables is for anybody to build on top of Bitcoin and to integrate the payment layer into their application. So it can be a game, a website, a merchant. There's currently, Meltem knows as well, but a website where you can feed chickens
Yes.
with Lightning, and you can live stream the chickens. They're also in Twitch talking about gaming. People are sending payments in Twitch. The Lightning payments affect the gameplay. You can open doors in a game.
There's also Lightning tipping embedded in Twitter,
yeah,
so you
yeah,
can
you
tip
can tip-
someone 1 Satoshi for a tweet.
Jack Dorsey, who's an investor in our company, tweeted about the ability to tip people on Twitter with Lightning. There's a plugin. One application I really like is the ability to earn money, not just to pay and to spend. There's a cool site called LND Work. It's like Amazon Mechanical Turk for Lightning. So anybody around the world can go on the site, they can perform tasks, and then they can just earn Satoshis, which is the lowest denomination of Bitcoin, a certain number of them. And the creator of the site had mentioned to me that there's a mom in the Philippines who her son just told her to go on the site and earn some Bitcoin and perform these tasks. So to me, what I think is really key about this technology is the global nature. The fact that it doesn't matter where you are, it's interoperable, it's seamless, and anywhere around the world you can instantly transact, which is key and which has not been possible before. For my company, it takes us a week to pay our employees, right?
Just to add on this, when I started using this, I was using it as a form of payment and a way to kind of work with brokers around the world. So first it was to accept payment. The second thing I used it for is I didn't have a dollar bank account. I didn't have the regulatory coverage. So how do I work with a broker dealer in the US? Well, we settled via that. So first it was direct customer payment. Second, it was working with a counterparty. But then we started to realize since we were able to use this technology, people were coming to us from the community. So Bitbond was a lender. They raised $5 million from a German institution, and they were lending small amounts across Africa, and they did distribution, and we did the integration in just a couple weeks. Jumia started to do merchant financing and came to us, and we were able to launch that quicker. So then I was like, wait a second, this is just kind of multiplying from here. And not only because I'm friendly to it, but also that our systems were compatible. We were able to launch, an 8-month project, or God forbid, one of these big companies comes to me and like, oh, let's do a pilot. 24 months later, we're still on the NDA stage, and and with another company like this, you have that full interoperability, you can launch in just a couple
And I
weeks.
think that's interoperability is key, and composability. I think also what you see here is this is software. So unlike prior computing platforms, which some of them require hardware, here you're talking about software. So it can be built and implemented much more quickly and improved upon.
But I want to go back to main overarching theme that we've sort of glossed over that I think is really important is the adoption of Bitcoin and what we call hyper-Bitcoinization, or why people, who's touching cryptocurrencies, who's buying them, who's holding them, what are they doing with them? There is a larger macro shift that's happening in our world, and I think what I love about events like this is we sometimes live in our little bubble and we're very into our issues, but there's a broader narrative unfolding on the global stage. If you look at politics, Brexit, what's happening here in America, if you look at what's happening with mistrust in institutions, concerns around deplatforming, the loss of privacy, particularly for consumers, and we see this, GDPR being implemented in the UK. We've been dealing with that since we have.
Right, too much to be forgotten.
But there is this broader narrative that's taking place here. Part of it is political and social in nature. Part of it is also a shift in demographics, right? There's a massive wealth transfer happening. Millennials think about wealth management, asset management very different. They think about investing very differently than older generations. Most people in my generation, they don't have RIAs or 401ks. They're buying Bitcoin, which is really interesting.
Bitcoin is a millennial retirement account, right?
But I think there is this
we
broader...
distrust institutions, and I think we've seen a lot of things kind of crumble. 2008 was the backdrop of a lot of that. And
Yep. And we see this all over.
You know what I call this? An AMP, an autonomously moderated panel.
We're very feisty. We also all know each other, and we've worked together for the last 4 years.
And you did great prep work. We had a lot of prep work.
The other thing I would also say is we talk about financial inclusion, and we say 2 billion people who don't have bank accounts, right? But they have smartphones. So if you connect them and you give them a method of value or a way to exchange value, all of a sudden you connect all of these people that previously didn't have access to financial services. But I think the financial inclusion piece is more than just about the unbanked.
Let's talk about that. Let's talk about the sort of social impact of it in its various guises.
And I think it's relevant to people here who are banked. And part of this is some of the generational shift that you're talking about, Meltem, and the societal wins. But what you see now is you see content creators, right? They create their content, and then they're giving these platforms and intermediaries huge cuts. Whether you're talking about bloggers, whether you're talking about media, artists, musicians, and now also we're in the age of blogging and podcasting, and so you see really famous podcasters that are paying huge sums and percentages to platforms like YouTube and some of the big FANG companies. And what crypto, we think, allows long-term is the ability for content creators to kind of monetize themselves.
Yeah. Another use case is, we trade a basket of about 30 currency pairs, and Bitcoin is one of them, and it does between 7 and 15% of our monthly volume. And who is buying this? So one, we're a liquidity provider for other smaller exchanges, so that's happening. That ecosystem is developing. It's taking a few years. When you read these articles that everything's happening with Bitcoin in emerging markets, okay, it's still small and growing. But what's cool is it's an on-ramp for people that are locked out. These are people with bank accounts. These are wealthy Africans. These are young developers that have some money to burn. These are professional investors that do exist outside of these markets. And what they're using Bitcoin for is then to participate in global financial products and investment. And I'm not talking pyramid schemes. I'm talking there's a really cool company happening in Asia. They want to invest. How are they going to get there from Nigeria? How are they going to get there from Johannesburg? How are they going to get there from Nairobi? And you can poo-poo that, but if you look at the demographics about what's growing right now below the equator, we're seeing this is a huge demographic that's coming forward. You see Japan, you see China coming into Africa because this is a new population that they can serve. How are they connecting? So have bank accounts, they're traditionally banked, but they're left out of the investment class.
Well, and there's also a broader shift in private markets, and we're seeing this play out across the investing and asset management space overall, where traditionally venture investing has been limited to firms like Andreessen, Horowitz, and specialized venture funds, but increasingly we're co-investing and working with hedge funds, private equity firms who are going earlier and earlier into the capital structure, taking on more risk and being more actively involved in building these companies. And in fact, I think many of the early successes in Bitcoin companies in particular happened when Bitcoin companies received investment from large firms that were very well connected and integrated into the financial system, could get bank accounts opened, could get certain things done from a regulatory perspective that maybe wouldn't have been possible before. But I think there is a shift as well, and you went through this with the recent change in the structure and regulatory status of your firm. We operate in the same way. We're a regulated asset manager. More and more firms are starting to look at private market investment, and that's historically been very illiquid. These asset classes are not marketable, saleable, they're not tradable. And so this idea of capital markets evolution, digitization, is playing out and on a lot of different fronts as you see more and more investors investing earlier and earlier in the capital structure, new types of lending models, which we've already seen with platforms like Lending Club and others who have sort of created new ways to connect these pools of people looking to raise capital and people looking to allocate. So that's a really interesting opportunity, and that's a multi-trillion-dollar opportunity. Private markets are massive, and they're very underdeveloped.
Okay, digging into that a little bit more, how more precisely could Bitcoin kind of upend the patriarchy?
I mean, I think we also have to think of
that was a shift. That was a left turn, hard left.
I mean, it's just it's getting rid of notions. I mean, not to bring this to playing the violin here, but I worked for 5 years when I first got into Africa in microfinance, and the fundamental paper that changed that and created that microfinance boom was this paper written, "The Poor Can Save." And everybody's like, oh, poor people can't save. What's the point of this? They can. It's a gigantic booming business and all around the planet, making lots of money for lots of people and growing wildly. So, what do you invest in? What is the volatility appetite? What is the risk appetite of a new investor, of a millennial investor, of a young investor, of a Nigerian investor? Let's get over our preconceived notions of what that is, because the systems that are set up are built only to serve people who we thought could handle those risk appetites.
Yes.
What Bitcoin does is just opens the floodgates. A woman in Nairobi on her couch can now participate, and look what we've built. A person living in another market or in Australia can now participate. I think we saw in Kenya what the mobile money was the first time you had the ability to buy on the Nairobi Stock Exchange using your mobile money. Yeah. That would be like buying on NASDAQ with PayPal in $2 increments, which is for some massive,
And by the way, in China,
scary, but yeah.
Today I could buy an ETF through WeChat, right? So there are other markets where you don't need a blockchain, you don't need digital currencies. digitization is happening in the asset management space, and so we're seeing that already. But what we're seeing more of is ESG investing and people investing in a way that aligns with their principles. This topic has come up again and again. I know it's a big topic this year since the conversation at Milken is around prosperity. But that's what's so interesting is Bitcoin does have really important political and social underpinnings. It's ideological, and there is something about it. It's sort of combined, so it's based on math, it's based on proof, verification, not trusting, but verifying. And so there is this really interesting aspect of it where, you know, Bitcoin almost has this religious fervor to it. There's a strong belief system.
Not for everybody. I mean, my customers don't care at all about that. I mean, that does happen, and I think we need to fight a little bit against that, because what happens is when you go to a regulator, they go, oh, are you one of those? You know, so I think that was the start of it. That was the start of it, and maybe in some markets like North America or Europe, that's part of it. But in other places, it's just something that works and something that opens that door.
Well, and Bitcoin has several qualities that, you know, if you only know Bitcoin, the existing financial system seems stuck, you know, in a very old age. For example, you know, 24/7 access, right? The idea that, you know, the Bitcoin markets don't close, and sure, maybe there's some benefit to getting some sleep sometimes and not constantly trading. But then also, okay, even to send a wire in the US, it's going to take several hours. With Bitcoin, you have 10-minute block times, which is slow, so on Lightning, you can transact instantly. And, you know, to do so anywhere around the world, that's just not possible in our existing financial system today.
At that cost. You can send a PayPal payment 24/7, but you're paying an additional
But
cost.
a lot of people are going to be blocked out of that.
Yeah,
Not everyone's going to have access to it. I've had, like, my PayPal transactions have been actually stopped.
PayPal's not available in local currencies in Africa.
Exactly.
I'm just saying that some people think, oh, we have PayPal for that. So what are the problems?
My
with
PayPal account was blocked when I was a federal prosecutor for over a decade, prosecuting some of the biggest money laundering cases, and my PayPal account was blocked for suspected money laundering while I was investigating a money laundering case overseas.
Did you look into that?
So I think there's truth, but we've been talking all about Bitcoin.
Yeah.
And you know, some people that are Bitcoin maximalists, I think of our fund as crypto maximalists. There's a lot more than just Bitcoin.
Yeah, talk us through that.
So we see things like security tokens. We see things like tokenized real estate. And you have real world assets, and they're digitized and they're tradable, and now all of a sudden you can open these assets up across the world, and you can marry investors and people who are transacting in these things much more easily and frictionlessly.
More with less friction. Let me, though, not to put a wet blanket on all of this, but since you did talk about money laundering, and we have talked about on-ramps and off-ramps, you know, when my father, for example, reads the newspaper about this, all he reads about is these things blowing up, and Tether being the most recent example, and fraud here, and exchanges being hacked here, and money gone missing there. And so, like, what's up with that?
Okay, so I mean, if anybody here has talked to 20 startups, you know, 17 of them are knuckleheads, right? You know, just like any other business that's like investing, right? You see a lot of bad with the good. And I think, you know, one of the first big blow-ups, it was like he didn't have a compliance team and he was doing everything, you know, of course. That's just bad business. It's not bad
Okay, but
crypto.
if you don't know, you're not an investor, and I get it. You know, like the coffee is hot, don't pour it on your crotch, for sure, right? Like these are new currencies, like, you know.
No, but I'm talking about the business part.
But the
It's
business
not
part,
the technology
exactly.
that's corrupt. It's the business people which are around the world. So what we have right now is, you know, I'm regulated in the UK, across Europe. Out of my 100 employees, 30 are compliance related. Some of the biggest businesses that are successful invest heavily in compliance. And I don't want to say that AML, KYC, know your customer, anti-money laundering is security theater. Sometimes, but it's an easy problem to solve. You put money at this problem and you solve it, and I think Katie can talk to, you know.
Yeah, look, I mean, as someone who's spent a lot of time prosecuting financial fraudsters and criminals in my life, I can tell you that criminals are some of the earliest adopters of any new technology, the internet included, and in all seriousness. So this is no different in this space, right?
Yeah.
That we see this, but I want to point out, you said AML and KYC, look, 99.9% of money laundering crimes go unprosecuted. Look it up, Google it, it's a fact. 99.9%. Yet the financial services industry collectively spends $20 billion a year on AML compliance.
Yes.
When you talk about companies, I sit on the board of Coinbase. When you talk about Coinbase in its early stages had to go get money service business licenses from 50 different states and different international jurisdictions in which they operate. You know, that's a really heavy compliance burden for
Plus, there's this
especially a young
culture.
startup.
Yeah, and plus it's this culture in the U.S. of the suspicious activity report. I don't know anybody here who knows what that is, but you almost have to kind of like hyper litigate, sending out these suspicious activity reports and peppering and covering your tracks. And this culture is just like wildly inappropriate to a young startup with a treasured cash flow. So I think what we have to talk about is then, you know, of course they're not going to be doing this, you know, anticipatory suspicious activity report filing and all this extra stuff. Does that mean they're less secure or more secure?
Yeah.
I don't know. I think it's also just, I don't want to blame it on the media, but some of the stories are totally wacky because of the political bent, because of the characters, because
Right.
of our culture's idea of what somebody who codes looks like and acts like.
Well, I always
So-
say short clickbait, long nuance. There's a lot of nuance that goes into it. And I think there is this fundamental misconception where people believe Bitcoin as a network is insecure. It's not. The Bitcoin network has never been hacked or had funds stolen. People are always the weakest link in any organization that touches assets or transactions. What we think about risk management, it's risk management 101. How do you manage it? How do you identify risk? How do you manage it? And how do you proactively stay in front of it? The challenge is a lot of the people in crypto, they're technologists, right? It was a wild west, and so they're not people who are thinking about risk management. They're thinking about how to keep their business afloat,
Okay,
how to raise their next round of funding.
But how do we mainstream that? How do we
Well,
mainstream
you see that now happening. You see now this ecosystem is growing. You see compliance businesses for crypto springing up. You see more crypto insurance offerings. I mean, as the ecosystem grows, so too do these kind of necessary
Chain
services
analysis,
come along
yeah.
with it.
Well, and a big part of mainstreaming it is also usability, right? Because I don't know if anybody here has ever used Bitcoin or cryptocurrency, but I don't find it easy to use. So I'm thinking you probably haven't either. So actually building out the technology to enable people to actually engage with and use it. Again, like the internet, in the early days, you know, people were on the command line, they were just typing these commands. Meltem, I think, as a big part of her investment thesis, has really focused on infrastructure and the importance of infrastructure. And right now,
And
I do think
usability, infrastructure to fuel
Exactly.
usability. Yeah.
Think
without
back
the
to
proper
AOL chat.
infrastructure.
Think back to AOL chat days, and now
Right.
what we do on our phone. Can you even compare the two?
Exactly.
Right.
So the
We're in the
infrastructure is
dial-up days,
necessary
we say.
to make it possible to really use it in, you know, the iPhone came out in 2007, right? We're not even close to that point right now in the cryptocurrency side of things.
Well, and if you read the book From Netscape to the iPhone, you'll see that when Steve Jobs got up to demo the iPhone and launched the iPhone, it wasn't completely fully working, right? And there was a lot of angst around whether or not this demo could be pulled off.
And it took a while for people to really use it for purposeful things. Everybody was using that app where you like drink a glass of water on it or you look at the stars.
Right.
People weren't really like, what can we be using this for?
Right. They
You
thought
know, now you do an
PCs were to
ultrasound.
store
Yeah.
recipes, right?
Yeah.
The main use case that people used to talk about for personal computers are to store recipes in them, things like this. So what I think is really exciting about crypto, and not just Bitcoin, about crypto as an ecosystem, is what new behaviors are going to be enabled that we can't even imagine now. Netflix, you talked about Netflix binge watching. Was that a thing that you would have imagined? Or Instagramming, or the gig economy with Uber?
So there was actually a great tweet by somebody in the community of Bitcoin who actually said he gave his 9-year-old son a Lightning wallet. And his son started requesting his allowance for his chores with Lightning, and then the dad is paying the son with Lightning, and that's like kind of like you wouldn't have thought that you'd be paying your allowance.
But a lot of these platforms we're talking about that got built on the internet, they were marketplaces that aggregated people who had demand for something and people who were willing to supply that something, whether it's content, whether it's services, whether it's investments. That's how a lot of the internet got built out, was aggregating marketplaces. And the marketplace, like PayPal, it's a closed loop system. And all of the value capture is happening by that company, those founders, and their investors. And so what's happening, what I think is so interesting about Bitcoin digital currencies in particular, is we look at the capital structure and we look at how people are monetizing. All of a sudden, you're changing the mechanics of how social coordination happens. It's also an evolution in the corporate form, in the way we organize companies and economic activity. You no longer need to be part of a corporation and have a formal structure. You have all of these developers and people who are working on different projects and earning cryptocurrencies. And it's sort of an evolution in how we think about work, work. The gig economy of so many 1099 employees now. And in the crypto community, you see a lot of people who are working on different projects, participating in different ways. It is this fundamental shift in how we organize and coordinate and how we create these marketplaces. So that they're more open and permissive and push control further to the edges, which I think is an amazing innovation.
Yeah.
But it's social. It's not a technology innovation. It's social coordination innovation fueled by technology.
Right, like I could send you an email across the world, as I have,
Yes.
No matter where you are, or a photo, right? And it's seamless, and it's frictionless, and it's instant. But
you can't send me
payment.
$1.
I can't send you $1.
No.
It would be faster for me to fly over where
And
you
Elizabeth
are.
Stark,
and give it to you.
Yeah. Tell us a little bit about sort of this machine-to-machine element.
Yeah, no, Katie, I was just thinking that's a line I've used a lot where, why can I send a video and a photo in every app, but I can't send value, and with Lightning you can, which is really exciting. So when people ask, okay, we can have, say, 100,000 or millions of transactions per second, why would you actually need that? What's the use case? Because even the big payment applications aren't going to have that kind of throughput. But it turns out not only can you have this high degree of precision, so you can send 5,000ths of a cent for a fee that's less than that, but you can actually transact at a very high volume, and humans may not need that, but turns out machines would. So I actually think there's this emerging ecosystem of the ability for machines, in many cases humans interacting with those machines, to transact with the other machines. A colleague of mine likes to say 100% of machines are unbanked, which I think is a little offensive to the humans that don't have access to financial services, but really it's not possible for a machine to have a bank account today. So with this technology, you can actually enable interesting new use cases where, say, thinking about machine learning, AI,
OT,
sure, Internet of Things, a self-driving car could, in the future, pay to
parking right by itself. Yeah.
Exactly, and charge or something along those lines. But even today, the ability, machine learning data entry is a really interesting use case where, in many cases, you actually have to have humans providing the data that you're running these machine learning algorithms on, and there are actually a few sites now where people are using Lightning to have data entry and input as well.
Okay, why don't I see if there's any questions from the audience, because we have about 10 minutes left, and I'll just do, and we'll keep going if not, but let me just see if there are any hands. Okay, yeah, in the back, yeah. I'd like to just remind the audience that a question is a succinct thing with a question mark on the end of it.
Thanks. Can you talk about taxes? Because Bitcoin, other digital assets, they're considered property by the IRS.
Yep, absolutely.
We'll pay them, I promise.
Great question. Okay, anybody else? We can collect a couple. Yep.
How do you say?
But we'll just wait for the mic for a second.
Where except cryptocurrencies and decentralized finance do you see the next applications where we see real use cases and adoption?
Okay. Yep. Okay, I'll take one more if there's another. Okay, yeah, I guess I'll take two more. One in the back and one in the front.
Hi, you ladies are amazing. I just want to hear a little bit about the mining aspects and the sustainability of all this.
Okay.
Great questions.
Okay, and last in the front here.
Kathy, you were talking about different use cases in terms of like paying back to content creators and musicians. And I just wanted to talk about, in detail kind of what the mechanics of that will look like.
Sure.
Okay. All right, so some mining and climate, taxes, a little bit of a dig in on how this tokenization of digital assets, and then taxes.
Use cases.
Oh, use cases, right, yes, use cases.
I can start with mining. So my team has done a lot of research on mining. We have 3 different papers available on our website that dig into a lot of the data. And we're now seeing, so I used to work before I entered crypto land. I worked in the oil and gas industry and primarily in shale gas. And a lot of what we focused on was infrastructure challenges around trapped assets. So if you have an energy producing asset, but it's in a part of the world where you have to transport that energy to a place where there's natural demand for it, that's very expensive. And so what we're seeing now with Bitcoin in particular, which is computationally intensive and requires a lot of energy and specialized hardware to mine to maintain the security of the network, we're seeing 2 really cool innovations. One is the idea of migratory mining, where people are actually taking a mining rig and they're putting it inside of these mobile units where they can drive to, say, North Dakota, to the Bakken Shale, where there's a gas production there's a wellhead there. It's too expensive to transport that gas to market. They're actually mining on site in a place where there's natural energy output. The second thing we're seeing is co-locating Bitcoin mining with renewables facility. And again, the same idea, if you have wind power in a location being generated where there isn't a large market of demand, and in most cases renewable energy is not generated in population-heavy locations, you have a transmission problem, you lose a lot of that electricity as it's being transmitted. We have people mining there. The interesting part is I worked in carbon markets, that's what I traded when I first started on a desk. You can then also capture a second revenue stream in the form of a carbon offset or a renewable credit. And in places like Kazakhstan, Central Asia, where there is a lot of energy but no real way to bring it to market, we're actually seeing governments now looking at ways to leverage these natural resources to participate not just in Bitcoin, to Katie's point, but all sorts of new computational networks being supported by this process of mining, which is securing the network. That's all I'll say there.
Just on use cases, maybe?
Yeah, sure. Just take whichever question you like.
So I work with the World Economic Forum and the Blockchain Committee. I'm the co-chair with a lot of great entrepreneurs in this space, and they do a whole series of research, which you can find online for pilots and real use cases that are happening, and not just like vaporware, actual stuff. And I mean, the one that we're all talking about, which is really interesting, is voting. So right now, GoChain has a project in Afghanistan. And when you hear the word blockchain, and we're going to blockchain it up, or and Melton last night said, someone was talking about blockchaining farm animals. Let's be real. It's usually when you want something where you want a lot of users to participate. I'm going to break it down in super basic. You want a lot of users to participate, and you don't want anybody in charge that's going to either erase data or tell a user they can't participate or change what's going on. So, in an electoral system, that's awesome if the government, of course, lets you do that. So that's one of the great places. The other place is in real estate or asset management. So, I don't know if this is in your life, but where I live in my neighborhood, there's spray paint in Senegal. There's spray painted on land that goes, this land is not for sale, because there's a lot of fraudulent land sale. So, Georgia did a great project where, again, you can't necessarily trust the government, or you can't necessarily trust the land agencies. So that's another one. So any place like that. When you start to hear, on the other end of the spectrum, private blockchains, which is a lot of them, and Walmart talks about this, tracking avocados from Mexico to the U.S. That is also on the spectrum of what a blockchain is, something that can be used. It's not, of course, public. It's just between Walmart and its suppliers. But it's a situation where many users can send in data that can be validated without actually doing the hard labor of checking each counterparty.
And much less energy intensive.
Exactly.
That kind of. Do you want to add to any of the? Yeah.
Well, let me combine all those questions in one.
Okay.
How about that? Taxes, use cases, energy mining. I'll talk about one word to capture all of these questions, and that's and also how can content creators benefit? Can I try this?
Yeah.
Wow.
Go for it. Yeah.
It's in one word.
Master
And
roll-up.
that word is called staking. And staking, Bitcoin is a proof of work system, but there are other systems out there. So it's energy efficient, it's somewhat energy inefficient right now in its current form. I think most of us would agree. But other kind of cryptocurrencies, they have this notion of staking and proof of stake, and Ethereum is meant to move to proof of stake. So there's staking. And I got a question about taxes the other day and staking. So now you have staking as this new behavior where you can potentially earn by staking your coins. So talking about use cases in the gig economy, I stake my coins, I actually earn something for that, and I'm therefore participating in securing the network or governance of the system. But in terms of taxes, Matt, to your question, it's really not just about taxes in Bitcoin, right? It's that presupposes that there's one kind of transaction. I buy Bitcoin, I sell it. And the IRS has said...
And one use case, yeah.
And one use case. And the IRS has said, well, that's property, right? But that doesn't really answer the question, because of all these new crypto behaviors that we're talking about, like staking, is what do you do for taxes there? If the value is literally changing of the asset you're staking by the minute, how do you calculate what you earned? And how do you calculate taxes? I think the more interesting question about taxes is, what a can of worms this all is for
Yeah. I
taxes.
mean, right now it's the F bar that you have to fill
Right.
out in your tax. So they're treating it like a foreign currency or a foreign bank account.
And by the way, I think speaking as a former government, I was 12 years in the government. I think the government doesn't know the answer, right? And it's not because this is such a global technology. You're not just talking about the IRS. You're talking about what do different taxing authorities across jurisdictions? How do they treat that? How do they harmonize
So
it?
I need an answer. I run a staking service for one network called the Tezos Network, and that's the big question because we have people delegating to us. We are earning, but you have to stake it constantly. So it's more like a restricted stock unit because you can't capitalize it right away. So we've been spending a lot of time. We formed a staking alliance with a number of companies and protocols in this new space. We're trying to get a no action letter, get clarity from the IRS, but it is very challenging.
Right.
And it's not just the IRS, it's UK Treasury, right?
Sure, and
it's
that's
every regulator. It's
this
really difficult.
ecosystem, when we were talking about the professionalization sometimes and this ecosystem and more services growing up, one of the new services we see is tax consulting services.
Tax consulting.
On the
okay.
tax front, so in terms of Lightning and then Bitcoin transaction, even broader cryptocurrency transaction, if you do buy, let's say like Meltem got a mug. She actually got me a really great mug for
I
my
bought you a
birthday.
mug with lightning.
Thank you, the Lightning Torch mug. Okay, so you pay $10 for this mug. That's a taxable event right now. So you're like, okay, you actually have a gain or a loss on the $10 mug that you paid with Lightning. So there's a group out of DC called CoinCenter. They're a nonprofit advocacy group for cryptocurrency, and they're pushing for a $600 exemption along the lines of, say, foreign currency. So, if you have $600 of euros, you're not.
I can buy a lot of mugs and not have to do capital gains
Okay.
report every time.
Quickly on the use case front. So one of the things I'm really passionate about is real users and real use cases. And I think a lot of what we had seen, I don't know if people followed the 2017, the ICO craze and the hype, but it seemed like a lot of people were raising too much money at too high of a valuation without actual products or customers or users. Yeah. And so now we're in this quote unquote bear market, talk about the wild ride, but we've seen a focus on infrastructure, on building real technology, on actually building out use cases.
Launching pilots, finally.
Yeah, and on actually focusing on what users need, what industries need, what companies need, as opposed to kind of selling this big vision but having nothing to back it up and no substance. Especially when it comes to content creators, as Meltem mentioned, there's the ability to tip using Lightning. But I actually think the idea of people on Instagram, people on on YouTube, people that are actually creating work on these platforms can earn money, and you actually don't need with Lightning. You don't have to have, say, YouTube integrated.
Yeah.
There are ways where you can just transact and pay. So I'm really excited about that use case, and
Okay,
the fact that you have
so-
almost no fees.
We have 1 minute, and it's a lightning round, and you have like 4 words each. And obviously, we're going to start with you since it's a lightning round. Where do you think the most exciting thing is going to happen? Right down the line.
Internet of value.
Okay.
Big tech companies.
Smart contract platforms.
Privacy.
All right. Let's give a hand to our amazing panel. Thank you so much, guys.
Thank you.